Hi, this is Randy Finney with Right Side of the Chart, and this is a late morning session for Tuesday, August 15th, 2019. Figured now is a good time to do a video. We didn't have really anything to report this morning. Futures were almost flat earlier today, and the bank earnings really at the time was a non-event, hardly moved the needle on the futures. So nothing much to update since the yesterday's posts, but I will go over the things I'm watching here today, and that's the equity markets. Nat gas I still like, and mentioned an update that might even be an official trade, and if not official, unofficial, it looks good. And I gave you targets on UGAS as well for you ETN traders. We'll get to that. Just a quick overview, and then talk about I want to talk about the continued divergence between platinum and palladium, and I think there is a big mean reversion trade coming there, so we'll get to that in this video. All right, so first and foremost, start out with QQQ, the NASDAQ 100. It is now at that downtrend line off the highs right there. Remember, we had this little previous high there, so that line can be drawn in one of two ways. We can draw it off catching. I like it this way on these two reaction highs right here, but we can also drag that line up a little bit because we have that reaction high right there. Here, let me take that away and show you what I'm talking about. Take all these lines away and draw it out, and this is the one I'm talking about. From here, we come in, catch that reaction high, or we come in and catch all these candles here, and that's the better fit, I think. And this would be, if so, this could be a momentum fueled overshoot just like this one was here, and so we'll watch for reaction here, and I think we'll get one. I rolled from back into that RTY long from yesterday. Everything looked good this morning, back in, but I just closed that out before I started the video, and I'll show you why in a second. Well, we hit resistance. We'll get to RTY in a second. But there's QQQ, so we're going to watch this. That's important. Remember, that's also the downtrend line off the highs right here. If we look at this chart, there you go. Same downtrend line, 1, 2, 3, 4. If we get a reaction here, 4 distinct reactions, so I favor that. And then remember, last week we did quite a bit of, we had quite a few bullish near-term technical developments. Took out the downtrend lines on the 60-minute charts. These lower downtrend lines, we took out the top of the August trading ranges, and we did so on an impulsive gap. So again, there's certainly the potential that we go on from here to make a marginal new high. I think at best it'll be just that, only a marginal, slight new high, a couple percentage points, 2, 3, 4, 1% over the previous highs, and we could fail as well. There's still some work to do. There's still quite a few reaction highs, and again, that's why I'm doing the video. We're right now at that downtrend line on the QQQ 60-minute and daily chart right here, and we'll see what happens there. PPO's hanging in there right now. This is a potential bullish sign if it can turn up here. It's crossed. It's had a couple whipsaws lately, so let's not put too much of a weighting on this. I'm just watching to see if it turns back up and stays above the zero line here. But remember, this is the market recently. It's kind of sideways, big choppy range, and what happens is the indicators like the MACD and the RSI, they tend to flatten out and cross back and forth above their respective zero lines. So let's just see what happens from here. If we break out above there, then look, there's not a lot of resistance overhead. You have these two previous reaction highs in QQQ, then the all-time high, and like I said, can make a run at it, but any new run will certainly be still a divergent high if it happens anytime soon. SPY, let's look at SPY for you real quick. Similar story. SPY, you have pretty much a double top high that it would, if it moves up much higher, it'll make a run at and test that high. We had several failures there around the 302 level on SPY, and again, same story, same posture on the daily chart here on the PPO 60-minute chart. Let's look at SPY and QQQ. We have this. Well, we already looked at QQQ. I had the same thing here on the Qs. This sort of a price channel forming now. We'll watch that and see how that develops. This is that same trend line I've had here for a while. These blue lines being the important technical levels. And again, 294 was the top of the August trading range, and we gapped above that healthily last week. And we've yet to backfill that gap. So there's some unfinished business left there on SPY and QQQ. and we'll watch this. This is a potential price channel. Can look like this or this, and we'll see if prices continue to work their way up in here. And of course, still any break of this trend line would be a near-term bearish technical event, and if so, you'd be looking at most likely at least a backfill of that gap there. So another test of those August highs back at 294. And QQQ, I know I already hit the 60-minute chart, but there's that price channel right there. You take this line and this line, you have these Qs working their way up within this parallel price channel right now. And when you find a price channel, you can always put a midpoint in there, a midpoint line, and that tends to also you can trade well off the midpoint line. So what that means is any break of this level, because once we gapped above the midpoint, you tend to work in these clusters. So you're trading above or below the midpoint within a channel very often. And so far, we gapped above and we've been above that midpoint. So break down below the midpoint of the channel would then put us back into the lower quadrant, or lower half of the channel. And of course, you have that 190.53. So these are all the levels to watch today. And of course, again, that downtrend line right there. All right, let's look at the futures, and we'll roll on to the other things I wanted to cover. NQ had, like SPY, they made a slightly higher high recently to kind of call those divergences into question. It was actually equal. I'm sorry. On the PPO, we had an equal high, but we made a higher high on the RSI, so those divergences were burned through on the RSI divergence. Both PPO and RSI divergence on ES were burned through. Right now I'm talking about NQ, the NASDAQ 100 futures. But at this high right here, we've extended. Remember, we broke down below the yellow trend lines, had a back test and a leg down. We now have a leg up, and this leg up has given us potential. Keyword potential divergence, not confirmed. Divergence would be confirmed if the PPO rolls over. It makes a bearish crossover. At least that's a term I use. I don't know if it's anywhere in, out there in the textbooks, but I say that because these are momentum indicators, and if they're pointing up as they are, they can continue to go up if the momentum's to the upside. And then if so, then they take out the previous divergence and burn through it. So you need to see a reversal, and I like to see a bearish crossover on the PPO at lower levels. That gives you that effective lower low, which gives you the divergence. So far, that's where we've stopped right now, and let's just see what happens from there. ES, let's take a look at that, and I want to show you RTY as well. ES, same story. This jog up right now, this slightly higher high over last week's high, has given us potential, but still unconfirmed negative divergence. So we look for a reversal. If we get one here, we could have a 60-minute divergent high. But again, we don't have a solid uptrend line right now. We broke this one, and we're back above the breakdown point. Sometimes you do break a trend line and make a marginal jog up. I still don't have very strong convictions. I've been saying that for the last couple of days on where we go. It was a tactical trade. A couple tactical trades have been made lately. RTY yesterday, I remember pointed this out in the trading room. We had a nice downtrend line right here on RTY. These are the small cap futures. There it was. And we back tested, and that gave an objective long. And we took out this trend line here, this minor trend line, and back tested. So I jumped on back into that one today. I'm out right there. Why? Because that's resistance, that 28.50-ish level, same level it stopped before, and that line of course goes back here. I see multiple reactions along that way. Now we may very well continue up, but again, my convictions aren't high, and I don't see a lot of upside here. So again, just getting in and out, tactical short-term trading. I just don't have a very high conviction on where the markets go, and I also think that trading is going to continue to be a little bit choppy. Here's a potential uptrend line to watch too on RTY. So if we continue to zigzag up, it might look something like this. You can see my next targets there about 1542, but I want to see us take out 1530, we'll call it right now, because we had a previous reaction high to open up the door for that move there. And nat gas, there's not a lot to update. Since yesterday, I did an pretty extensive post covering both the daily charts of natural gas, the 60-minute chart, and give you targets for UGAS. So I just wanted to point out we're coming up to that 234-ish level. Next target there is 230. 239 or so. Somebody asked in yesterday's post in the comment section, which I answered earlier today, hey, what would your stop be? Well, your stop is dependent on assuming you take it. If it, if this is your cup of tea, this type of trade setup, you can do many things. You have an uptrend line right there off these 3 reaction lows. You could have a stop somewhat below that. Each of these former targets, these are support levels. You can put stops there. But the most important thing, any trade you take, your stop should be commensurate or calculated in line with your unique entry price, where you bought. I've been pointing out this potential divergent low for a while. You could have bought anywhere in here. And so if your entry is here and someone else is here, you guys are going to have 2 completely different stops. More importantly, it's where you're targeting. I made the case that this could be this is zoomed in here, but this whole thing could have been the first leg up on the daily charts after we had a divergent low and we broke out above a downtrend line. We had a major buy signal on the daily charts, something I was highlighting back in July, I think in July and September. That played out for what may be the first leg up, with this being the first corrective wave, another divergent low. We could be starting the next leg up, and so therefore my answer to that question was, it depends. If you're of that mindset, I've put up a chart in the past. I didn't have it pulled up for this video, but I've done a chart before where I go back for decades, and I show you the seasonality with natural gas, and there's always a big rally, either just before or just after the end of the year. Sometimes that rally comes early. It comes in the fall, and we're already in almost the middle of October, so we could be looking at another leg up, or maybe we continue down and the rally doesn't come until later this year or early next year. Of course, that has to do with whether the winter's warmer or colder than expected, and also the supply demand, anything going on with nat gas at the time. But so far we're zigzagging up. Let's just keep this very simple. We're in a very near-term uptrend. I gave you a trend line there to watch coming up on the first target. And again, stop should be calculated based on your entry price and your price target. So if you bought in here somewhere and you're shooting for that 239-ish level, then you calculate the distance to that target from where you entered. And then I like to use a 3-to-1 or better risk-reward ratio. So you divide your total gain potential, your price target, by 3, and then set your stop there. So your stop should be, in other words, about a third of the way, a third of what your price target is down below where you entered, and that keeps you kind of on the right side of things. If you should use at least, if you use a 2-to-1 risk-reward ratio, you have to be better than 50% on your trades. If you use a 3-to-1 risk-reward ratio, you can actually have less than 50% win rate and still get ahead. So that's something to consider. But so far the breakout looks good. Let's not spend too much time on that. We'll watch potential divergence here. We'll see if that forms up. If not, if it burns through, all the better. And I'll update this as it continues to play out. All right, let's talk about the precious metals here real quick. So, okay, the market's rallying today, which, as you would expect, causes good pressure on gold. Gold's the risk on. It's been an extremely highly correlated risk on, risk off trade, meaning when the markets are correcting, people are worried, they're going down, they're buying gold, and likewise when the stock market rallies, everybody says, okay, everything's okay now, market's going to head to new highs, they sell gold. It's really that simple. Don't get tied up in there. There are disconnects from day to day. I'm talking the overall trend. You take 10 days with the market being up 1% or better like this, like it is today, go back and look at those 10 days and see what gold happens, and you'll know what I'm talking about. So maybe 9 out of those 10 days, 8 or better. So that's a pretty solid relationship there. There's a near-term downtrend for gold, and I've done extensive analysis on gold as well. There's still very much the potential for the longer term, that weekly bull flag pattern to play out. It's not playing out as of now. We don't have a buy signal. As I said, any trade setup, including that one, any trade setup is only that. It's a setup, not an actionable trade. You need the buy signal, the catalyst, and so we're still watching that. And that's probably going to take both a reversal in the stock market, or at the very least an impulsive, convincing breakout in gold. Whether or not the stock market does pull back, all the better if it does. So I just wanted to say that there's been a lot of updates on gold near term. As long as the market's rallying, and with the near-term bullish price action last week, which increased the odds that the market may want to take a run and test or even pop above the recent highs, that just puts the near-term outlook on gold as more bearish than it was, let's say, before those developments last week. So there's some levels on 60-minute chart. But what I wanted to talk about is and I've talked about this before, the huge disconnect between palladium and platinum. Now, first of all, platinum and palladium are considered they're very similar metals. They're related and they're considered in the same group, and they usually trade in line with each other in sync, not one to one in percentage terms, but the overall trends are pretty much there. And this is PALL. This is the palladium ETF, PALL, and you can see the chart, big bearish divergence potential. It's not confirmed. You have, again, the PPO needs to make a bearish cross, but you have negative divergence, and you will continue if this thing continues up anytime soon. It would have to really take off to burn through these divergences because the indicators are lagging so much. So I'm highlighting this right now because I think a big trend trade is coming. Palladium can be very lucrative on both the long and the short side. These trends are big. There's a 25% quote-unquote correction, and of course here's a 134% rally after that correction. There was, well, so far it's been a 106% rally, but even within there, just the corrections alone are profitable to trade, usually double digits, well into the double digits. There's a 20% drop right there. So where I'm going with this is palladium continues to roar and chug away like it has no clue that the rest of the precious metals are under pressure right now. Again, here's gold. Lately, you can see it coming down. It's still in that weekly bear flag. Again, these are weekly charts. Silver's coming in as well. Could be flagging, maybe. And of course, the much more closely related PPLT is the platinum ETF. Look at this correction in platinum right here on the weekly chart. Platinum's dropped almost 14%. Here, let's look at the daily chart, and then I'll show you. So here's the drop right here in platinum recently. About, what is that? Did I measure it wrong before? I said 14. No, it's about 12% drop off that recent high. And look, this is a constructive chart. You had a triangle, symmetrical triangle. You had a breakout, and we're coming in for a near back test. But PALL, like I said, just hasn't gotten the memo. This thing continues to move up, and it is in a bearish rising wedge. So if nothing else, maybe a paired trade coming up soon. Long platinum, short palladium. And I'm going to get to the futures in a second, and I'll also show you real quick when we just take a look here. Just turn off these lines and compare the two. When we look at PPLT, here, let's just do it here. I already had it down here. Yeah, our PPLT right here. And you can see look at the trend. Look how they move together here. I can compare them from the same point right here, and you can see the trend. They move normally almost in lockstep. Again, don't look at the price differential because they're two different metals. They're priced differently, just like gold and silver are priced differently, but they tend to move together. But look at the direction, and this is where I'm seeing just a major disconnect recently, with palladium taking off and platinum going the other way. So big mean reversion coming, and let's take a look at one more chart. Okay, if you remember back in early July, I started talking about harping on the fact that silver was poised to play a game of catch up to gold. The rally in gold had been very strong. Been bullish on gold since even the lows back before last a year ago, and quite a bit since. But at this point, I started taking a look at the charts, and I look at things like the gold to silver ratio. Look at the percentage moves, and so I laid out said at the very least you're looking at some really nice high profitability trend trades in these mining stocks: FSM, AG, and EKK, EXK, ASM, and I think that's it. Yep. And these guys were all up, double if not triple digits from where that was. And silver, here, let me show you. We'll went ahead and find that chart. Here's the gold to silver ratio. So what you look for in the gold to silver ratio, you can draw trend lines. And again, it's just the ratio between gold and silver. And so back here, These are the bigger trend lines right here in recent years. And then usually towards the high, you get these little blow off tops. You get a correction there, and that's when if you have to look at what's been going on. In this case, we had gold rallying and silver lagging behind, and so you had right around that time. It was that July 9th when I, started to get looking for outperformance in silver and the silver miners, and you had this trend line break happen. I think the next day, July 10th, on the gold to silver ratio. This minor trend line break. So that's a dotted line, and that's where I was looking for the outperformance in silver. And you can see at that point, silver rallied 3 times. 300% return over what gold did on the same time period. Now, where am I going? That's over. Okay, I know a lot of you caught that and were able to profit, on the silver stocks, even more so than the gold stocks. But that was then. This is now. Let's take a look at the the platinum to palladium ratio, which I have on here somewhere. Platinum, palladium. Here we go. We'll look at this one. And what you can see on gold, I didn't go to the long term. I just showed you about a 7-year chart of the gold silver ratio a minute ago. But when you go back for a 20-year, you'll see it's about the 80ish level. When the gold silver ratio hits that point, that's when you usually get the major mean reversions. If gold's gotten ahead of silver, it means silver's going to catch up. And you can also look at this another way. So on this one, we're looking at platinum and palladium ratio, and we're going back 2 decades. And that ratio has only gotten this low once. Look, it's an extreme. And that's due to the extreme outperformance right here. You can look down on the bottom. You have platinum here. You have palladium here. You can see from this point right here, I measured. Here, let me turn these lines another color. Okay, now you can probably see it a little better. Okay, right here to here, and that was back in around the beginning of 2016. Platinum, from that point, you can see it had a little rally, but it gave back a lot of those gains and rallied since. But from that point, we're up, and that's what I measured from the bottom there to there. We're about 18%. So pretty much sideways for platinum. Palladium over that same time period has gone up a whopping 258% over the same time since 2016. And so the point is, you look at these moves here, when you see that one get ahead of the other, there's usually mean reversion. The last time, again, that we saw anything remotely close to that was back here, leading into the late 90s up to about 2001. Look, coincidentally, right around the beginning of the year, just like that rally started here in 2016. I don't know. I'm looking at this chart. There seems something to that. A lot of peaks right around, look at it, 2008. Anyway, sorry guys, didn't mean to get off topic, but I'm just seeing a lot of these things seem to peak right around the beginning of the year. Maybe there's something there to that. Anyways, that seems a little more than coincidence, a lot of these peaks. But all right, there it is, palladium right there. I didn't measure that run because it comes off the left of the chart, but you can just see it was huge compared to platinum up top. Now what this measurement here is, that's not the gain. What that measurement right there is, it's showing after the ratio reached such extreme right here, right around the beginning of 2001. I measured from the top right here down to the bottom. Palladium fell 87%. One futures contract in palladium, 87% drop. You're talking, I don't want to get it. The gains would be huge. Or you could, obviously short PPLT or PALL, the ETF. And then likewise, from that point right there, this was the drop from the peak in platinum, and it only dropped 37%. So I think there's a big mean reversion, and because how far palladium now, I'm longer term bullish on the metals. So these mean reversions can work in one of two ways. It could also mean that platinum plays a game of catch up to palladium. But again, that's where a paired trade would work. A paired trade would be, for example, if you have 100,000 that you're going to commit to this trade, you put 50,000 short palladium and 50,000 long platinum, and therefore if they both rally but one rallies more than the other, it should help offset the gains and losses. It's less risk than just taking 100,000 and shorting palladium. Plus we need that sell signal in palladium. But I wanted to point out the moves, and you can see right here after that followed, you can see that's the gain, 440% on that bull market run where palladium ran up 316% in that bull market. When they corrected, they both fell about the same right there. In 2008, they both peaked, started falling in the beginning of the year. 64 and a 74% drop, roughly in line. But then you had a much stronger bull run in palladium off that low compared to platinum there. Roughly equal corrections, and again, just a monster bull run in palladium that's still going on right now, with platinum not getting the memo there. Okay, and everything we were just looking at are weekly charts. You do not act, or at least I don't act. I don't enter or exit a trade based on a weekly chart. It kind of paints the bigger picture, tells me what kind of trend I might be looking at, and therefore, do I go in for a tactical or a strategic trade? Tactical is quick in and out. Strategic is, I'm going to hold on for a multi-month swing trade or even a trend trade. Here's a 60-minute charts. This is where I sort of hone my entry prices. This is platinum right now. The metals have been weak lately, and again, I told you platinum's down quite a bit recently. You can see all the trend lines. We had this triangle pattern back here that was highlighted back at the time, and once it broke down, boom, right there. That was your sell signal, and the break of that plus the 925 support, I believe, or 926, I believe I mentioned at the time. When they both went, you had a waterfall type drop down to this 874 target. Again, all these were laid out back at the time in advance. That target was hit, or support level, and we've been working our way up right now, recently up above this downtrend line, or uptrend line. Again, 60-minute chart, so you want to watch that. Maybe a little price channel here. Another break takes us there, and a break below 874, 875 with conviction could trigger the next leg down. I should start adding additional downside targets in case the markets continue to run up towards and above those highs. We'll probably see more pressure in the metals here, downside. However, again, that's platinum. Now let's look at palladium. I've got it down here somewhere among all these charts on the bottom of my screen. Here it is, PA. As you can see, this thing is just, like I said, it's not gotten the memo that gold, silver, platinum especially are all heading down. There's obviously something going on, but it's not. Again, when we look back 20 years, we've seen this before. There's certain, whatever the forces, supply and demand forces are, whether there's more demand right now for palladium for industrial uses or any other applications, military, I don't know, or it's just the mines were hitting more platinum. Again, they're related metals, or usually come out of the ground together. Doesn't matter to me. I'll never know the true fundamentals. You can read up all you want on it. Let the charts be my guide. So what I'm looking at here on the 60-minute, just like I showed you on the minute ago on the daily chart of PALL, is you continue to work our way up here with the divergent high. Last time we had a divergent high was right here. 60-minute divergent high was a smaller divergent high, and that was good for a drop of about 14% on that correction. So that's just a 14% pullback, if you will, quote unquote, within a larger uptrend. So what am I looking at? Obviously, I'm watching this trend line here. It hasn't been visited in a while, so the first sell signal would come on a break of this minor trend line, and likely get another reaction off here. If we do, that'll help to validate this trend line, at which point, if we get another reaction to validate it even further, then I'd be looking for a break of that for the next even more powerful buy signal. And I'll have to then again study the daily chart. This is only a 60-minute chart. That kind of helps get you in. And let's go back to that daily chart. This is a weekly chart there. You can see that uptrend line right there on the weekly chart. And here's the daily chart. Here's a trend line. I believe I have a price alert set for that one. So this is really, I believe it should be that same trend line I just showed you on the 60-minute chart. So if we come back to that, and we may break right through it. We may not get a reaction. We don't need a reaction anymore on the daily chart here, at least not this trend line, because I have a lot of reactions going back all the way to this candle here from August 2nd. And if you're trying to replicate this, make sure to use log scaling. That's what I use on my charts. Arithmetic scaling will give you a slightly different trend line on this one. It makes a bigger difference on some charts, more so than others. And so levels I might look for, maybe back test to this trend line here. But again, if that trade starts to play out, because what it's telling me on the weekly chart, especially if I can make a more bearish case on the metals. Right now, I'm still longer term bullish gold, but gold needs to do some work. It needs to show me several things need to happen for that to pan out. The stock market cannot go up another 30-40%. It could possibly, because look, gold rallied with the market rallying earlier this year, but the market just kind of burns through all these divergences and goes on. It's just going to give a headwind to gold, that's all. And so it's unlikely to play out with that bull flag scenario. And so what I'm getting at, if the markets do break down and gold breaks out of the bull flag, silver's doing well, that may give a headwind to a short on palladium because it is a precious metal. So we'll have to just, like I always say, the charts are dynamic and so is my analysis, and a lot goes into this. So I just want to kind of lay this out there, and then I'll end it with this. If we do get some sell signals, those especially on the daily and even this weekly chart with the break of this weekly trend line, from where we're at today, and again, that's may or may not prove to be the top, only time will tell, you're talking a good 35% drop in palladium, maybe 30, about 40 right there, and I'm going to add one more trend line here because this is where ultimately I think palladium will come back to about that 85 level, and that would be from where we're at now, a drop of about almost 50%. So let's just focus on that right now as a potential target with a sell signal pending. So, like I said, not an official trade yet, not even an active or actionable trade right now because we don't have any sell signals. This is a security clearly in an uptrend with zero sell signals at this point in time, but I'll be watching closely for these trend lines to go. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.